Hey everyone, welcome back to Corporate Decoder, the place where we find the hidden money secrets in company reports. Today we are diving deep into Forum Funds' latest shareholder report for the Auxier Focus Fund. It's like looking into a stock market crystal ball, but with a lot more numbers. Most of us just see headlines about stocks going up or down. But what is really happening behind the scenes? This report is packed with details about how the Auxier Focus Fund is doing, what it owns, how much it costs to be an investor, and why the managers think they are doing a good job. Before we jump into the meat of this report, if you enjoy getting these kinds of insights directly from the source, make sure you are subscribed. And if you want to chat more about these kinds of filings or just talk stocks, join our Discord community. The link is right there in the description below. Alright, let us get started. This report covers the last 6 months of 2025, from the 1st of July to the 31st of December. It is essentially a checkup on the fund to see how it performed and what it is up to. Right at the top, they give us a little intro. The Auxier Focus Fund is what we are looking at, and it is essentially a basket of stocks and other investments managed by Auxier Asset Management LLC. Their main goal here is long-term growth. They also tell us where to find more information, which is handy if you want to dig even deeper. Now, one of the first things most investors care about is what it costs to own a piece of this fund. They break it down by share class. For example, if you had $10,000 invested in a shares for these 6 months, it would have cost you about $65. That is about 1.25% of your investment. For institutional shares, that same $10,000 investment would have cost you a bit less, around $40. Or 0.80%. Investor shares cost just a little more than institutional shares at $48 or 0.92%. It is always good to know these fees because they directly eat into your returns. Let us look at some key numbers for the fund itself. As of the end of December 2025, the total net assets, which is the total value of everything the fund owns minus any debts, was a whopping $315,643,116. That is a lot of money. They also tell us they hold 126 different investments, and their portfolio turnover rate is just 1%. A low turnover rate usually means the managers are not buying and selling stocks very often. They like to buy and hold, which can be a good sign for long-term investing. The investment advisory fees after any discounts were $905,497 for this period. These are the fees paid to the company managing the money. Now, how is all that money invested? They show us the breakdown by asset class. A huge 94.4% of the fund is invested in common stock. That is the main way they are aiming for growth. They also have a small piece, 0.7%, in preferred stock, which is like a mix between stocks and bonds. Another 0.7% is in corporate non-convertible bonds. And then there is 3.9% in US government and agency obligations, which are generally considered safer. Finally, they have a tiny 0.3% in a money market fund, which is typically used for very short-term parking of cash. Digging a bit deeper, let us see what industries are making up this fund. The biggest chunk, 28%, is in financials. This includes banks, insurance companies, and other financial services. Then comes consumer staples. At 19.1%, these are companies that sell everyday necessities like food and drinks. Healthcare is next at 16.5%. Information technology is at 12.2%. Consumer discretionary, which are non-essential goods and services, is 8.7%. Industrials, which includes companies that make machinery or provide industrial services, makes up 6.7%. Energy stocks are at 3.4%. Consumer cyclical is 3.1%. Materials at 1.6%. Technology at 0.3%. Communications at 0.2%, transportation at 0.2%, and lastly, real estate is at 0.0%. It is important to note they say this breakdown excludes fixed income securities and cash equivalents. And who are the big players in this fund? What are the top companies they are betting on? First up is Microsoft Corporation at 6.13%, then MasterCard Incorporated Class A at 4.92%. Philip Morris International Incorporated is at 4.54%. The Bank of New York Mellon Corporation holds 4.45%. Alphabet Incorporated Class A is at 4.02%. The Kroger Company is at 3.81%. Bank of America Corporation is at 3.43%. Visa Incorporated Class A is at 3.22%. United Health Group Incorporated is at 2.91%. And rounding out the top 10 is Corning Incorporated at 2.69%. Having a few big names like Microsoft and MasterCard can give a fund a stable backbone, but it also means the fund's performance is heavily tied to how these big companies do. They also point us to their website for even more details. It is always a good practice for investors to check out these resources to get the full picture. Now, the filing also includes the actual financial statements. It is a deep dive into the numbers. Let's look at the schedule of investments. This is where they list everything they own in detail. This is the nitty-gritty. We see holdings like Alphabet Incorporated Class A, Amazon.com Incorporated, Apple Incorporated, and Visa Incorporated. It is a diversified portfolio. As expected, with positions in various sectors, the total value of common stock alone is over $298 million. With a cost of about $86 million, this shows a significant unrealized gain on these common stocks. They also list preferred stock, corporate bonds, and US Treasury bills. Looking at the statement of assets and liabilities, we see as of the 31st of December 2025, the total investments at value were over $315 million. On the other side, the liabilities were about $953,000. So the net assets, which is what remains after subtracting liabilities, is that $315 million we saw earlier. The statement of operations shows us how the fund made and spent money in the 6 months leading up to the 31st of December 2025. They had investment income of over $3.2 million, mostly from dividends. Expenses were around $1.7 million, which includes the investment advisor fees, after all said and done. The net investment income was about $1.9 million. But the biggest story in the statement of operations is in the realized and unrealized gains. They had realized gains on investments of over $1.4 million. And then the big mover, the net change in unrealized appreciation on investments, was a massive $18.7 million. This means the value of their holdings went up substantially during this period. So the total increase in net assets from operations was over $22 million. That is a strong performance for a 6-month period. The financial highlights section gives us a long-term view. For investor shares, the net asset value per S-share at the end of 2025 was $32.42. Looking back at 2021, it was $20.39. That is a solid increase over those years. Their total return for the 6 months in 2025 was 7.46%, not annualized. For the full year ended the 30th of June 2025, the total return was 12.81%. The portfolio turnover rate has consistently been around 1 to 2% over the years, confirming that buy and hold strategy. In the notes to the financial statements, they explain how the fund is structured. The Auxier Focus Fund is part of Forum Funds, a Delaware statutory trust. They offer 3 classes of shares: investor shares and institutional shares, each with slightly different fees and features. Shares, for instance, have a maximum sales charge of 5.75%. This section describes how they value their investments. They use last quoted prices or official closing prices from exchanges. If those are not available, they use bid and ask prices. For less liquid investments, they employ valuation methods approved by the Board of Trustees, which can involve looking at similar assets or projected cash flows. They also explain the 3 levels of fair value hierarchy, with level 1 being the most reliable quoted prices in active markets, and level 3 being the least reliable, significant unobservable inputs. The majority of their investments as of the 31st of December 2025 fall into level 1, which is a good sign for transparency. This is an important note for investors. The investment advisor Auxier Asset Management LLC has agreed to waive fees and reimburse expenses to keep the total annual operating expenses within certain limits. For example, for investor shares, they are limited to 0.92% of assets. For shares, it is 1.25%, and for institutional shares, it is 0.80% through at least October 2026. This helps keep the cost down for shareholders. They also mention that as of the 31st of December 2025, there is about $1.8 million in fees that the advisor may be reimbursed for in the future if specific conditions are met. They provide information on the fund's tax status. The fund intends to qualify as a regulated investment company, which generally means it distributes its taxable income to shareholders and avoids entity-level taxation. They also detail the cost basis for tax purposes and any net unrealized appreciation, which is a significant positive number indicating the potential for future taxable gains. This section is quite detailed. It is essentially the reasoning behind the Board of Trustees approving the investment advisory contract with Auxier Asset Management. They look at the nature and quality of services, the costs, the profitability of the advisor, and compare fees and expense ratios to similar funds. They acknowledge that while the fund's performance has sometimes underperformed its main benchmark, the S&P 500, particularly in strong bull markets, it has done well in down markets and maintained its objectives. They also note the fund's holdings in smaller companies which can lead to volatility. Importantly, They observed that the fund's total expense ratio is lower than its peer group, partly due to fee waivers from the advisor. The board concluded that the advisory fee charged is reasonable given the services provided and the fund's overall management. And finally, the report is signed off by Zachary Tackett, the Principal Executive Officer, and Karen Shaw, the Principal Financial Officer. They are attesting to the accuracy of this report. So, what is the big takeaway from all this? The Auxier Focus Fund, as presented in this filing, seems to be managed with a focus on long-term capital appreciation through a buy and hold strategy. The fund's asset base is substantial, $315 million at the end of 2025, and its top holdings are well-known large-cap companies. The performance in the latter half of 2025 was strong, driven by an increase in the value of its investments. While there is a mention of slightly underperforming a benchmark in certain periods, this is often a trade-off for a strategy that aims to preserve capital in down markets, and the fund's expense ratios are competitive, especially with the advisor's fee waivers. The investment advisor's contract renewal was thoroughly reviewed and approved by the board. A key risk to watch could be the fund's concentration in the financial sector, and its exposure to market upsides and downsides driven by its large cap tech holdings. Overall, for investors looking for a core equity holding with a long-term perspective and a disciplined management team, this report paints a picture of a well-established fund. Alright, that is our deep dive into the Auxier Focus Fund's shareholder report. What do you think of these numbers and what they signal for the fund's direction? Drop your thoughts in the comments below if you found this breakdown useful. Please hit that like button, it really helps us out, and subscribe for more of these corporate decoder sessions. And don't forget to check out the Discord community link in the description. Thanks for watching, see you next time.